Every now and again, this notion of a next commodity supercycle raises its head. The reason it does so is I think that brokers and media sites get bored, and so they attempt to generate some form of hyperbole, which makes for a good talking point. It's certainly a very good marketing tool for brokers when they're trying to offload commodity-based issues that their analyst has for some foolish reason recommended. So I thought I would look at this notion of what is a commodity supercycle, but more importantly look at the history and to see what the drivers of the last cycle were, and to see if they are repeating in some form in the current day, but then more importantly actually have a look at what the market is saying. So the first thing we have to do is look at this notion of what is the definition of a commodity supercycle as distinct from a standard commodity cycle. This is an important point of delineation between the two. We're talking about commodities plural, so we're talking about a wide range of commodities displaying explosive growth. We're not talking about, for example, gold going on a tear as it has over the past 15 months or so. That's an isolated secular bull market confined to a single commodity. So in terms of the traditional definition, a commodity supercycle is a prolonged period, typically 10 to 20 years, of high prices for raw materials like oil, metals and agricultural products, driven by strong sustained demand, often associated with periods of intense industrialisation and economic expansion. Note those last two key points. It is this notion of industrialisation and economic expansion. Without economic expansion, there is no commodity supercycle. It's really that simple. In terms of history, I asked the question, what was the last commodity supercycle? Because I wanted to get some sort of backdrop or baseline as a point of comparison for what is occurring now or what might be occurring. From what I could tell and my own experience, the last recognised commodity supercycle occurred during the early 2000s through to mid-2010 peak phase 03 to 11, and then it fizzled out. Its milestones were a start early 2000s, peak 2011 or thereabouts, and it fizzled out around 2014, 2015. In terms of drivers, things that pushed it along, there's a handful that are widely recognised. China's rapid expansion and industrialisation. There was a global infrastructure boom. In fact, what people think was our last mining boom was actually a mining infrastructure boom. Very loose monetary policy and years of underinvestment in infrastructure and the like. In terms of the collapse, the handbrake was lifted on Chinese growth quite dramatically. There was a stronger US dollar and tighter global liquidity and overcapacity. This is a function of boom-bust markets. You push really hard, you build too many, you don't need all the things you've built, demand collapses. And there was the 2014-16 oil price crash, which cut the legs out from under it. This raises the question, is a new supercycle emerging? To try and generate some form of answer, what I've done here is I've looked at the features of the 2000 supercycle and the potential 2020s supercycle. So what I've done is I've gone through and I've trawled through all the bibs and bobs that have been put out there in terms of both history, but also, I was going to say marketing material, let's say analyst reports that are pushing this notion of a new supercycle. And I've tried to match them up according to a series of key features such as demand driver, start date, key commodities, main buyer and the like. So you can pause this and look through it at your leisure, because I want to get on to the most salient question, and that is, what does the market say? Because price will tell us if this is occurring. And remember, let's go back to our original definition of commodity supercycle. We're talking plural. So we're not talking isolated instant. What I've done here is I've looked at the 52-week performance of the main commodities that you would come across. And you can see it's a mixed bunch. Some have done very poorly, like lithium. Some, like cocoa, have done very, very well. A lot are just modest, and you would expect that sort of performance within their normal range of activity. There's nothing unusual in here. This is not a series of markets undergoing a supercycle. So in terms of looking a little bit deeper into potential markers that might point us in the direction of a supercycle, fortunately, the market has a series of commodity indices, and we can use those as harbingers of what might be occurring. And they look like this. And what I've done, you can see in the top left, these indices are an aggregate of looking at their underlying commodities. So you can see in the top left, I've put the components that they actually cover. So you get a sense of the markets they cover. And these are futures markets they cover. Agricultural, going nowhere, was going somewhere prompted by Russia's invasion of Ukraine, but that has tailed off and prices have been drifting down ever since. The energy complex been going sideways for, let's call it 2 years. Grains drifting down for 2 years. Industrial metals, we have that spike in 2022, which is to a degree an artefact. But since then, they have gone sideways. Remember, coming back to our definition of a supercycle, a period of rapid industrialisation and economic expansion. If you have economic expansion and industrialisation, you have a dramatic pickup in the need for industrial metals. We're not seeing that. We're seeing broad congestion. Livestock is slightly different. It's been positive this year, but we have to be a little bit careful here because this is a very narrow, very specialised index. So does it take part of a commodity supercycle? My initial quick answer is no. Is it in some way a benchmark? Again, I would say no. Petroleum index, which is a variation on the energy index, as you would expect, reflects what the energy index is doing, and that is going nowhere. In the olden days, the expectation would have been that if you'd had some form of conflict in the Middle East, the price of crude oil would have gone through the roof. That's not happening. That to me indicates that the world within which these products exist is changing. Whether that's a function of electrification or what, I don't know. Whether it's a function of a change in internal market dynamics with OPEC and better management of supply-demand and American oil coming on stream, don't know. It's not my topic. In terms of precious metals, again, on a tear. But again, singular, not plural. This is not a broad-based rally. And softs. We've had this instances of doing very, very well and instances of not doing well. Coffee of recent time has done very well, but has now given up a very large proportion of the gains it has made. So we come back to this. This is the essential question. What does the market say? And the answer is quite blunt. If the question is there a commodities supercycle either emerging or occurring at present? The answer is a definitive no.
Before you leave, don't forget to like the video and subscribe to our channel.